Okay, we're ready for our third and final video for chapter 3. Before I talk about the general ledger and what's called the posting process, I want to first talk about what's known as the accounting cycle. Perhaps you're saying, what is the accounting cycle? This is a series of steps that takes place throughout the accounting period where we take our everyday business transaction and turn into what's known as useful accounting information. During the accounting cycle, we learn how to analyze business transactions. We've done that already. Journalize the transaction. We did that in the last video lecture. And now we're going to have to do what's called post to the ledger accounts. We're going to learn about what's the process known as posting to the ledger account. After that, we prepare what's known as a trial balance. We'll do adjusting entries and adjust the trial balance, prepare financial statements, and do what's called closing entries. Now, we won't do all of these in chapter 3. Our main focus right now is how to post to ledger accounts and how to prepare what's known as a trial balance. And we'll end the accounting cycle with what's called a post-closing trial balance. And we'll cover these other items in chapters 4 through 6. But again, our main focus right now is post to ledger accounts and preparing a trial balance. Now, every account title has what's known as its own separate ledger. The ledger is used to keep track of each account's running balance, meaning that if there's a question on how much cash does a company have, that information is found by analyzing their cash ledger account. Or how much money do I owe the bank still? I'll look at my notes payable ledger account. Or maybe how much have we earned in revenue for this accounting period? I'll look at my service revenue ledger account. So the purpose of the ledger is to keep a running balance for each of our accounts so that we'll know at all times throughout the accounting period how much we have in each of these accounts. Now, the question may be asked, how does the information get into the ledger account? And that's a good question. Well, first, we'll take a look at a sample chart of account. Okay? A chart of account is a listing of all of the accounts used by a company to record their business transactions. The chart of account is broken down by account classification. You always have first your asset accounts, then your liabilities, stockholders' equity, revenue account, and your expenses. Now, some of these accounts are in black because these accounts we have not covered yet for these specific account titles, but we have covered the account classifications, okay? So with your chart of account, again, these are the accounts that a company is going to use throughout the accounting period to record their different types of business transactions. Each of these accounts will have their own separate ledger account. So what we have here up top is the journal entry that we did in the previous video lecture. And here we have a sample of a ledger account for cash. So the cash ledger account is only used to record your cash transaction. The information from the journal is what we call posted to the ledger account. Posting is the process of transferring data from the journal over to the appropriate ledger account. So if you notice in this first transaction, the date was October the 1st. So record the date of the transaction into your cash ledger account. Okay? Next, we give a brief explanation of what took place. On that day, we issue stock. It just says stock issued in the explanation section of the general ledger. Then you have the amount. Whatever took place in the journal, do the same thing in the actual ledger. Meaning, if I debit the cash account in the journal, I'm going to record that amount on the debit side of my cash ledger account. But I did skip an important step, my apology. J1 stands for the journal page number. We call this a reference number, meaning we're going to identify where the information is actually coming from. So the data we're about to post is coming from page 1 of our general journal. So the J1, which stands for journal page 1, is recorded in the reference column of the general ledger. So if there's questions later on as to where this information came from, we can revert back to page 1 of the journal and look at the full transaction. Okay? So once you record the date of the transaction, explanation, and your reference information, you will then record the amount of the transaction to the appropriate debit or credit column of your ledger. So again, if the account was debited in the journal, you record it on the debit side of the ledger account. After you post each transaction, determine what is going to be the new running balance for the account. So as of right now, there's a balance of $10,000 shown in our cash ledger account. So as we post each transaction, we're going to keep a running balance for not only our cash account, but for common stock and all of our other ledger accounts as well. So notice that we only post this transaction to the cash ledger account. We did not post the common stock transaction. Why is that? Because common stock has its own separate ledger account. Every account title has its own separate ledger. You only use the cash ledger account to post your cash transaction. Now, once you're done with the posting process, the last step is to go back to your journal and to record the account number into the reference column of the journal. So this 101, that is the account number assigned to the cash account. So when you see this 101 in the reference column of the journal, that lets you know that this 10,000 shown here has been posted to the cash ledger account. In the journal, the reference column stays blank until you have posted the information into the appropriate journal account. Notice that next to common stock, we do not see an account number. That's because this transaction has not yet been posted into the common stock ledger account. Okay? So all of these transactions shown here, you're going to post to the appropriate ledger account. Each account title has its own separate ledger account. You only post cash transactions into the cash ledger account. And so if I go back and look at my cash ledger account again, this is showing all of my cash transaction. It shows the amounts on the debit sides, the amounts on the credit sides, and then it shows the ending balance of my cash account. And these are all the other accounts as well. It is showing you all the transactions of the journal posted to those ledger accounts. It shows the actual dates of those transactions. And in red, it is showing you the actual balance for each of those ledger accounts. We're almost done. Now, once you have journalized all of your transactions, you post those to the appropriate ledger accounts. We then prepare what's known as a trial balance. So that's going to be the next step, preparing a trial balance. I'm going to skip through those. So a trial balance is just a listing of all of our account titles, and it shows their balance at any given time. Typically, we prepare the trial balance at the end of the accounting period. However, it can be prepared at any time throughout the accounting period just to make sure that the total of our debit balances equal the total of our credit balance. Now, on your trial balance, you're going to list all of your account titles. You're going to list them in a certain order. You'll first list all of your asset accounts, followed by your liabilities. Next up, you have your stockholders' equity account, followed by your revenues. And last, you're going to list all of your expense accounts. So you first list all of your account titles in this order on the actual trial balance. The actual amount are going to come from your ledger accounts. Back real quick. So the ledger shows the ending balance for each account, whether it has a balance on the debit side or a balance on the credit side. You're going to record all of your account titles first, and then list their balance on the appropriate debit or credit side of the trial balance. Okay? So here we have a sample of our trial balance. This was prepared at the end of the accounting period. So notice the account titles, assets, liabilities, stockholders' equity, revenue accounts, and expenses. So list the account titles first on your trial balance. The account balances are coming from the ledger account. So if the account has a debit balance, you record it on the debit side of the trial balance. If the account has a credit balance, you record it on the credit side of the trial balance. Once you list all of the amounts, get a total for the debit column of the trial balance, get a total for the credit column of the trial balance. Those two amounts must equal one another. The total amount debited must equal the total amount that was credited. If the amounts do not balance, you want to make sure that amount was not transposed, that your numbers are added up correctly, make sure the amounts are on the correct debit or credit column of the trial balance. And that will conclude our final lecture for Chapter 3. So be sure to review the video lectures, the reading assignments, the PowerPoint presentations, and complete your Chapter 3 homework assignments, including the introduction blocks, the quizzes, as well as the homework.